Real estate investment practice problem using OneNote. Amortization schedule with PivotTable. Get ready because we're raising the stakes with real estate. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side. We're in the Practice Problems tab. We're in the 4050 Amortization Schedule with PivotTable tab. Also note, when using OneNote, take a look at the Immersive Reader tool. Our practice problems will also be in the text area with the same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we got the information up top, calculations on down below. We're looking at a pivot table which we would be adding in Excel, noting that we do work this problem in Excel, but we want to look at the process here without going through the Excel jargon step by step going through it, so that you can then decide whether it be worth your while to put together the Excel worksheet and or use the Excel worksheet for whatever purposes that you need. So the information is going to be up top. Remember, when we're constructing some type of table, in this case, we're looking to add an actual table and pivot table to it. We want to construct the data in such a way that we can pull the data from a set of terms, and so that we can change those terms and change all the other data automatically. So we got the similar information. We got the 500,000 on the loan amount, 20%. We're going to say down 500,000 times the 20%, 0.2 would be calculating out the 100,000. That means if we had a loan of 500,000 minus the 100,000, we would calculate out then the 400,000 loan amount. So the 500,000 loan home minus the down payment loan 400,000. We're going to have the 30-year standard loan as our starting point. If we take that 30 years times 12, we'd have 360 monthly payments. We have the rate of 5%, remembering that that's a yearly rate, and we're looking at monthly terms, so 0.05 divided by 12 would have a small monthly rate, which would be necessary when we do the calculations. Remember that the rate usually given in years, we're actually going to be calculating typically with monthly calculations. The payment calculation we have calculated in prior presentations, typically something that you would want in a formula tab most of the time. As you calculate your information, having the payment change if you were to change any of the data cells up top. That's a payment calculation within Excel. We did that in prior presentations. We'll not go into it in detail here. Note that the total payments for the entire 30 years can be calculated quite easily by just taking the 2147.29 about, that's a rounded number, times the 360 payments. That would be about 773,024 about, minus the 400,000 loan would give us then the 373,023 of the interest over 30 years. What's more difficult for us to understand then is the breakout between the interest per year versus the principal per year and per payment, which could be useful when doing taxes, especially if the interest is deductible, and what the loan balance will be at the end of each year, so we can kind of predict where we might be if we were to sell the place, sell the real estate at some time in the future. Now, in a prior presentation, we talked about putting the amortization schedule together. Then we talked about putting the amortization schedule together in such a way to format it so that we're going to add a formal Excel table to it. Now we're adding a formal Excel table, but also adding then the pivot table. So remember, just note on the data, when you put the data together thinking that you're going to add a pivot table, you want to make sure that your headers are in one cell. So in other words, these headers that have two rows to them, you can't really put them in two separate cells as I might do if I wasn't going to be adding a table, because when you add the table, it'll throw off the table. That means you've got to wrap the text in essence and put it in one cell, or else have very wide cells. And when you wrap the text, that will throw off or cause these widened rows in any data you put to the right or left. And that's kind of the pros and cons of basically adding tables and wrapping the text with them. Also note that you want to have information in basically each cell, especially with a pivot table. So with a pivot table, you want, so for example, this 0 up top, you might leave that blank if you weren't adding a table. This cell here, this cell here, this cell here, you might have it blank if you weren't adding a table. I would try to put something in each cell for a pivot table. If you don't, the pivot table can get thrown off depending on how you use it or function it. The other big component is with the years. The years can be a little bit difficult to construct. We do have a nice little method to calculate the years quite easily in Excel, so you can take a look at that and how to add the years fairly easily to your worksheet. But you do not want to have just like 1 year here and then a big space, then 2 here and then a big space with nothing in it, and then 3, because the pivot table, primarily what we're going to be looking for oftentimes with this pivot table with regards to a amortization table, is breaking out the information by year. So that means each item, each month in the year needs to be listed as a 1, so the pivot table can basically sort. It's going to filter, in essence, as we saw with the slicer last time, by basically 1. It's going to take everything with a 1 and then sum up all the payments that had a 1, sum up all the interest with a 1, and take the loan balance or the minimum balance with a 1. Same with 2, 3, and so forth. So that's the one thing you want to know. Also, just remember that you do not typically want, when you're adding a table, to manually sum up the total at the bottom of the table, but rather not have a total column, build the table, just insert the table, and then tell Excel to add the total column and then sum it up with the use of Excel. Also note that any other items like check figures or anything on the right-hand side of the table, you do not want to have it connected to the table, because if you try to put something connected to the table that is not part of it, Excel will probably try to add it to the table. So you have to make sure you have a space of a cell between the table and anything else that you're going to be constructing. Okay, so once we had that, we added a table last time where we had this slicer functionality, which gave us a bit more functionality than we would have if this is not a pivot table, this is just a slicer, which is in essence a filter. You can see the filter up top. That's going to filter by these year 1s here, as we saw, and that's why you need a 1 for each item, and it just filters that out so you can filter it by year 1. And now I can take my 360 very long amortization table, filter it down by year, and I can see the total interest and the total loan payment reduction as well as the loan balance quite easily. However, I can't see it side by side. So this is a step up than from what you can typically get on an online calculator such as this. I'm not promoting this particular calculator, but online calculator, you got the loan amount, you've got the years, the rate, and so on. It calculates the payments, gives you the amortization schedule. You can't really filter this schedule too easily in the ways that you would want to. So that slicer, which is fairly easy to do by just simply adding a table, is pretty nice and gives you that functionality. Now, for further functionality, and the main functionality I'm thinking about with regards to an amortization table, is to see each of the years and summing these up. So I want to take each of these items that we have here, year 1, and then take these totals and sum them up for the total of the year and this ending balance for year 1, year 2, and then year 3, this ending balance, and sum them up. So I have a year by year, and I can look at that for 30 years instead of 360 on an unwieldy amortization table for projections into the future. For that, we can add the pivot table. Now, adding a pivot table once the table's set up properly is quite easy. We just go to the Insert tab, we add the pivot table. And then you could put the pivot table in a new tab, or you can put it in the same tab. It just depends on what you want. Default is a new tab, so if you keep the default and you just add the table, it will then, here it is, the new worksheet. It'll then add it to a new worksheet. So your data will be on one worksheet and your table will be on another. However, if you want it in the existing worksheet, as we will do in our practice problem, you could just simply put the existing worksheet here and then add the table. It'll also reference the table that it's getting the data from up top. Once you do that, so notice I'm referencing the cell where we want the table. It'll construct the baseline to build the table quite easily. So it'll look something like this. You'll have this blank spot over here. You'll have your data pivot table fields, and then you'll have your added pivot table analysis up in your toolbar as well as the design. These two items will not be present unless you're on the pivot table. They will disappear when not on the pivot table. Now, once you're in this point, it's confusing for most people because now you're saying, okay, whoa, I've got like these fields up top, and then I've got these 4 boxes on down below where I'm going to put this information. That can be quite confusing. Mostly, and you can do other things with this pivot table, but to construct what we're going to do here, oftentimes the table will do much of it basically kind of for you. In essence, it's going to try to guess what you want to do with it. So if you look at the fields we have up top, any field that's a value field, it's going to try to put in a value place. So that's usually there. So in other words, it'll usually guess correctly to build what we want to build, except for one kind of component. So what we're going to want is we want the years to be on the rows. I'm imagining years on the rows, and then I'm imagining that we want these items. I want the payments, the interest, and then the loan reduction and the loan balance, which is just the end number, which means this, and then that number, but per year. So that's what we're imagining. So we got the years. If you just click on the years, then the years will pull down, but they will automatically generally pull down to the values cell. That's because the years are in there not by date. I didn't say text year 1. I just put a 1, which means it thinks it's a value, so it put it in the value cells, and that's not where we want it. I want a list of years 1 through 30. So what we do is we just pull it out of values and we put it into the rows. So we just put it into the rows, and then it does what we expect. We got years 1 through 30 in the rows. Once you do that, the rest is pretty straightforward. We're going to skip the months. We don't want the months because we want the years summing the year data. So we could just click on the payments, the interest, the loan reduction, the loan balance, and those will then populate in the value area, and it will basically sum up the value here. It's going to have the sum function on the values, the summing of the values, meaning everything that had a 1 with it in it, representing year 1, it's summed up now for the payments, for the interest, for the loan reduction, and it did the same thing for the loan balance, which is wrong. This one's wrong because I only want the end number on the loan balance. Everything else I do want to sum it up, meaning if it had a 1 next to it, I want you to sum up the payments, interest, and the loan reduction. If it had a 6 next to it, year 6, I want you to sum up the payments, which will add to the same amount it should, and then sum up the interest, sum up the loan reduction, and then we don't want you to do that for the ending balance. We'll have to change that. So it does everything we want to do, just magic. That's all we have to do. However, it's kind of ugly right now, as you can see, because the formatting has 4 digits and so on. So we can format each of the cells, and the formatting, a little bit tricky, maybe not quite as intuitive, because you might go in here and just try to highlight these items and then right click and format them. You can do that, but it's not the way you're supposed to do it, really. What you want to do usually is go into this box down here. It says the sum of the payments field. If you click on that, you'll get this value field setting, and within the value field setting, it'll show you how it basically functioned here. It used the sum function instead of the other functions, which were count, average. That's usually going to be the default if it's a number. Numbers are in there. That's what we want. So that's good for this case. On the last one, the loan balance, we're going to change it, but usually that's what we want. And then the number format, if I want to format the numbers, they're going to be, if I want to format the numbers, they're going to be down here, the number format. And there's our familiar screen where we have the currency. I usually go to currency, brackets, remove the $, remove the decimals, and then we can format each of the sections, and there's the formatting that looks nicer now. We do that for each one. If I did it for the interest and the loan balance, then it would look something like this, and we'd have those two set up. Now the last one's a little bit tricky because remember the sum, we don't really want the sum of the loan balance. I don't want you to take everything with a 1 on it and sum up the loan balance, because the loan balance represents the ending number at the end of the period. So what I'd like to do is, the way to get the number we want, which is the last number in each of the years, is to say I want you to take the smallest number that has each year in it, because that's going to be the one at the end of the period. So instead of doing the sum function when we format it, we're going to take the min. We'll take the min. Give me the smallest number that has a year 1, year 2, year 3 involved, and that will be the loan balance at the end of the year for each one. So we'll do that, and then we'll do the same formatting on the numbers, and that'll give us our loan balance. So now we've got this nice table that was built much more easily than we had when we did it with a slicer on periods 1 through 30. And it's a lot easier to look at, and it's something that we can't normally do with an online calculator very easily, at least. And then we can see basically our information with regards to the payments and then the interest. Now you can see the interest changing year by year, and that then can help you make projections out into the future, take a look at tax implications a lot easier. We can also see our ending balance much more easily year by year, so that you can think about, okay, what if I sold the property, after 5 years, after 6 years, instead of hunting for the end of the year on a 360, time frame amortization table. And then this data doesn't fresh automatically when you change the actual data input, but you can refresh it as well. So if I was to take this information and change something like the rate to 2%, say, what if I got a 2% loan instead of 5%? The amortization schedule that we made will change automatically, that one with the 360. This one, you can simply right-click on it if it's working properly. It can get a little glitchy sometimes, but you should right-click on it and refresh. Just hit refresh, and it'll refresh the table so that you will have the new table here. And that is really nice, so that you can then refresh it. And then if you wanted to do comparisons on a side-by-side, the next step you might want to do is say, well, what if I had a 2% interest rate? What would be the side-by-side interest, and what would be the loan balances, for example, versus if I had a 5% interest rate? I would like to see them side-by-side. In other words, instead of me going back and forth and refreshing from 2% to 5%, I would like to see them side-by-side. Now, you can't really do that. You still have to do some copying and pasting in order to do that, because that would be something you would need more than a pivot table for. You'd need like a database to just automatically generate a report like that. But you can do a little copying and pasting and figure that out fairly easily, and you could start to customize whatever you want to see. So in other words, you might put a schedule like this together. You might say, well, for years 1, 2, 3, 4, down to 30 years, I would like to say, well, what if I had a 5% interest rate, holding everything else equal? Then what would my interest payments be for 1 through 30? And I would compare that possibly to the interest if I had a 2% interest rate from years 1 to 30, and then possibly look at the difference between the two, and maybe then I can use that for my tax implications and so on and so forth. To build this table, what you would do is just simply change your data set up top from 5% to 2%, and then you'd have to do some copying and pasting. Simply copy the interest column here, and then you'd put the interest column down here, pasting it 1, 2, 3. So it wouldn't be a table that would change automatically, because you can't use formulas to the pivot table, because the pivot table is going to have to be refreshed. But you can create something like this without too much trouble by just refreshing the pivot table and doing some copying and pasting. So those are some of the examples that we'll do in Excel. And you can see, like, you have a lot more flexibility if you can create these things in Excel, and you can, put these together and then start doing tax projections, or thinking about what if you sold the property over a certain period, and think about different loan terms and whatnot a lot more easily than you'd be able to do if all you had was the straight payment amount and then a 360, amortization table that you can't really reference to within a worksheet quite as easily. So if that looks relevant to you, then, we worked this problem in Excel, and we also, you can look at the Excel worksheet and see if that is something that you could just use for your own decision making.